PayPal. You know the name, right? Online payments. But they're quietly planning something huge, something that could completely shake up how small businesses handle their money. They want to be your bank. So in this explainer, we're going to break down their pretty ambitious plan. All right, for all you entrepreneurs out there, does this sound familiar? You've got this amazing idea, you need some cash to grow, but your bank, man, they feel more like a brick wall than a partner, right? It's a super common story, and it's exactly the problem PayPal is zeroing in on. That brick wall, let's call it the banking bottleneck. Let's dig into why this has become such a massive headache for so many small and medium-sized businesses. I mean, the difference is just night and day. On one side, you've got the old school banks, slow, drowning you in paperwork and super rigid. Then on the other side, you have to promise a fintech, fast, all connected, and built for the digital world. This is the real battleground where the future of business finance is being decided. And these are the things that really create that bottleneck, right? You need money for new gear, but the loan approval just drags on for weeks. Maybe your business is a little different. It doesn't fit their perfect little box, so boom, you're denied. And on top of it all, you're juggling like what, 5 or 6 different apps just to see where your money's at? That kind of fragmentation is a killer for growth. Okay, so with that problem laid out, let's talk about PayPal's big move. And listen, they're not just trying to tweak a feature here or there. No, they're aiming to build a whole new system to replace the old one. And here it is, the main event. PayPal has officially filed the paperwork to launch its own bank, literally called PayPal Bank. They filed with Utah's Department of Financial Institutions and the FDIC. The goal? To just cut through all that red tape and become the direct go-to financial partner for the millions of businesses already on their platform. This quote just nails their whole strategy. It says, the idea is straightforward. Make lending easier for small businesses and give them less reason to rely on traditional banks. It's not about trying to be everything to everyone. It's about solving this one super annoying problem so well that the old way just seems, well, obsolete. Now, you might be thinking, hold on, is PayPal really cut out for this? Well, let me just throw one number at you. $30 billion. That's how much PayPal has already loaned out in working capital to small businesses since 2013. And this chart really puts that $30 billion into perspective. It's gone out to over 420,000 businesses all over the world. So the key thing to get here is that PayPal is not new to the lending game, not at all. They know what their merchants need. They've just been doing it through partner banks. This move is all about bringing that power in-house. So how are they legally able to do this? It all comes down to something called an industrial bank charter. Think of it as a special kind of license that lets a company that isn't a traditional bank, like PayPal, offer real banking services. We're talking taking deposits, making loans, the whole shebang, all FDIC insured. And the really crucial part, it lets them do this without all the same heavy regulations that a big bank holding company has. This legal move is the key that unlocks their entire strategy. Okay, so they've got the legal key, but what does this actually look like for a business owner on the ground? Well, the goal is to create a true one-stop shop for everything financial. The whole vision is this perfectly smooth, integrated experience. You're already using PayPal to manage your payments, right? So the next logical step is getting your loans right there, on the same platform. And then the final piece of the puzzle, holding and growing your money in a savings account. Everything all in one spot. And here are the actual products they're planning to roll out. We're talking direct loans with a way faster process. Because hey, PayPal already has all your sales data. We're talking FDIC-insured savings accounts, so your money is safe. And of course, fully integrated checking accounts to tie it all together. But the real magic here, the core idea, is this single dashboard. Can you imagine? You log in and you see your cash flow in real time, your spending, how much credit you can access, all in one clean picture. For a busy entrepreneur, that kind of unified view is an absolute game changer. It lets you make smarter decisions faster. But this whole one-stop shop idea, it's more than just a new product. It's a signal of a much, much bigger shift happening. To really get the full impact, we need to look at the future of fintech and where this all fits in. This timeline really shows you this isn't some spur-of-the-moment decision. This has been a long, calculated journey. It started way back in 2013 with lending. Today, we're right at that crucial point, the bank charter application. And if everything goes to plan, we could see PayPal Bank become a real thing around 2026. This is a long-term play, and we're watching it unfold. What we're seeing with PayPal, it's really the perfect example of a bigger trend.
Fintech companies are sniffing out the weak spots in the old banking system, especially for groups that have been overlooked, like small businesses, and they're using technology to build something better, faster, and way more connected. And all of this leads to one massive question for the future of finance. As companies like PayPal build these seamless, all-in-one worlds for your money, could traditional banks just become obsolete for the next generation of entrepreneurs? That is the billion-dollar question we'll all be watching. Thanks for joining us for this explainer.